you'll pay no tax whatsoever. The interesting thing is this though, or the good thing, if you've got that 150 grand in your bank account, you can use that for personal purposes as you please and as you choose. Shaz, Nawaz here. I hope you've had a fantastic week and you've had a lovely Friday. The weather was very nice today, as it was last Friday, so it's been scorching hot, and we can do with a bit more weather like this. I don't know about you, but I quite love the heat. So service accommodation, I think some people sometimes say that this qualifies as a trade. My view is it's not. It doesn't qualify as a trade, but it does qualify as a trading activity for certain tax purposes. Helena says fabulous. Thank you very much, Helena, and thank you Andy and Ranjit and Paul for joining us. If you're still here, if you have any questions, feel free to write them in the comments box, or just say hello and post any comment you like, linked with obviously service accommodation. So service accommodation isn't a trade as such, but it meets or is treated as a trade for certain taxes like income tax, corporation tax, capital gains tax. So that makes it very interesting. Another good thing is you don't have to pay national insurance contributions, which is good. It's going to obviously reduce your tax liability. But the really big one, in my view, or one of the two big ones, are capital allowances. So if you are in a service accommodation business and you buy, let's say, commercial property, then you should be able to claim capital allowances on the purchase, depending on what the previous owner has claimed or hasn't claimed. Most of them don't claim much, to be honest with you. Some do, most don't. So there's an opportunity there for you. Then when you refurbish the property, there's a second opportunity for you to claim capital allowances. So you might have seen some posts from me on the New England Club, which I'm converting right now, bought as a commercial property for £500,000. And we're converting it into 12 flats, 6 one-bedroom flats and 6 two-bedroom flats, which should be finished by the end of the year. And the capital allowances claim on that was just over £125,000. So pretty substantial. And then we'll have a second lot, because obviously we're going to be running service accommodation from that particular property. So capital allowances are big. The real big benefit is if you run your service accommodation business as, I say, a limited liability partnership. It could be a sole trader or an ordinary partnership. But if you do it as a LLP with limited liability, so if you make a huge profit, let's say of £150,000, if you've got £150,000 worth of capital allowances to write off that particular year, you'll pay no tax whatsoever. The interesting thing is this though, or the good thing, if you've got that 150 grand in your bank account, you can use that for personal purposes as you please and as you choose. So you can pay for your mortgage, you can buy a new house for yourself, you can buy a new car, go on holiday, private school fees, do whatever you like. Whereas if you have service accommodation in a limited company, then you can still write off the profits for corporation tax purposes. But if you take the money out personally, then you'll have to pay income tax. So that's a huge benefit and something for you to think about. Ashley, thank you for joining us. Darren says hello or good evening. Good evening, Darren. I hope you're well, my friend. And I hope all that stuff that you were doing with the NHS and the fruit and the vegetables is working out well. So capital allowances are something that you need to pay attention to. A lot of people miss out on them. Please make sure you don't miss out. It costs you nothing to get it investigated. If you don't have anybody else who can help you, you can freely and happily approach my firm. We will look at it for you, but this isn't meant to be a sales pitch. I'm just here to share information and knowledge. If you exceed the VAT threshold, you'll have to become VAT registered, so you need to be mindful of that. You also need to look at whether you're doing rent to SA and how to structure your business to qualify for TOMS, the Tour Operators Margin Scheme. So that's something that you need to be aware of. Sometimes people ask about sideways loss relief. That's not available, so you carry forward the losses against future income for serviced accommodation. So that's something for you to bear in mind. From 6th of April 2017 onwards, you're able to claim the HMRC stipulated mileage of 45 pence per mile for the first 10,000 and then 25 pence per mile thereafter. Prior to that date, you couldn't claim the HMRC stipulated mileage, you could only claim the actual costs. So that's pretty good. The second big one, the big benefit as I see it, is that service accommodation income qualifies as net relevant earnings for pension purposes. So going back to the earlier example of making £150,000 in profit and writing it off using capital allowances, let's say you've made £190,000 in profit. You use up £150,000 of capital allowances, you've got £40,000 profit left. You can make that contribution into a pension, or I prefer SASs, move that into a SAS, and you'll have to pay no profit whatsoever. Of course, from the 190, the 40,000 is now ring fenced or locked into a SAS, so you've only got personal access to the other £150,000. Helen says, delighted that it worked out for you. You're in a similar situation. Well, I hope it works out well for you too, Helena. So that £40,000 which is locked in your SAS, you can invest that in buying commercial property, loaning it to third parties, or loan back 50% to yourself. So that's your investment as well. It's just in a trust, in a separate bank account. So make sure you look at pensions, because that, alongside capital allowances, I think is a huge game changer for reducing your tax, but also having a good cash flow strategy. Above and beyond that, when you look to sell your service accommodation business, you'll qualify for what was known as entrepreneurs relief, nowadays known as business asset disposal relief. So you watch out for that and make sure you qualify for that. You then get other reliefs too when you dispose of assets, in terms of rollover relief and gift relief. Gareth says, really need to get my SAS up and running. Gareth, you should do. I think it's a good additional, if I can call it a strategy, a good additional feather in your cap, and you should seriously look at it at least. I think it's very flexible, and it's something all property investors and all business owners should look at. So rollover relief, gift relief applies to you, and if you gain, or if you use rollover relief and then invest that money into service accommodation, and then later on, if your business doesn't qualify as a service accommodation business, as long as you met the conditions for rollover relief initially, you won't have to, or none of the funds will be clawed back, which is very important and is very useful. Faisal says, can you convert a regular company pension converted to a SAS? Yes. I mean, just so we're clear, Faisal, and thank you for joining us, I am not qualified to give investment advice. So just to answer your question, I have seen that happen, where people convert a SIP into a SAS, or they have a works pension somewhere where they've worked for, say, 5, 10, 15 years, however long, and they convert that into a SAS. So to answer your question, yes, it can be done. Helena says, so if you earn, say, £200,000 and you have not put anything into a pension, can I put £160,000 on your 40k? You can put £160,000, Helena. I assume you're talking about the last 3 years which have been carried forward. So as long as you had some kind of a pension, or you're part of some kind of a pension arrangement 4 years ago, and you've not made any contributions, then yes, you can use the last 3 years plus the current year. So you're right, you could, in that particular year, you could make £160,000 contribution, which would mean your profit would come down from 200,000 down to £40,000, and now you've got 160 grand in your SAS. So you can do that. And Keith says he's done that absolutely from a SIP to a SAS. So thank you very much for confirming that, Keith. As you know, Keith, I was just trying to stay away from investment advice, so it's good that you've shared it and said yes, you can do it. So there's a live example for you, Faisal, of Keith who's done that. And finally, the big one, which is a very grey area, is you may be able to claim business property relief, or nowadays known as business relief, which basically means if when you pass down the shares to your children, let's say, you won't have to pay any inheritance tax on that element. But in order for a service accommodation business to qualify for that, there needs to be a very high element of service. Now, this is a grey area. Some practitioners and consultants and tax advisors will say you can't do it. Some will say you can do it as long as there's a high element of service, and others will probably say to you they're not sure. I think if there is a high element of service, you've got a better chance. But if you're just offering very basic services, then you will not qualify for business relief. I hope you enjoyed that. Thank you very much for joining me. I hope you have a fantastic weekend, and see you next Friday. Bye for now.